All right, folks. So first of all, I apologize for the abrupt change in rooms. I will give you an explanation for that. So we have class period right at the same time as the BSAD 153 course, which I believe everybody in this room has taken. They are located in 1420, and they're having a quiz today. And half of them could not get their computers to work for the quiz, which makes it a little bit difficult to take a quiz in Excel when the computers are not loading up. So we had a nice shiny computer lab, and my boss, Dr. Caden, says, I want your computer lab. And I said, no, please don't take it from me. And then she said, too bad, so sad, we're taking it from you. That's actually not true. She actually asked me to volunteer, and I said, today we're doing a lecture. It's fine for us to move. I know it's a little bit uncomfortable because we normally have all of this elbow room and space in there. This is a little bit like a traditional course, but I get to see your faces for once. So it works out really well. I'm just kidding. Actually, everybody's pretty good about paying close attention and having the faces up. But Dr. Caden will be very thankful. Aren't you? Isn't that true? Yeah.
Cause a lot of less stress for students.
All right. All right.
I'll bring you guys treats one day.
All right. Because I was not going to give them any additional extra credit, Dr. Caden. I just wanted to make sure you knew that. All right. All right. Anyway, so a few announcements I want to make sure that we're up to date on. So we are at week number 6, and we are getting closer to the middle of the semester. And usually by the end of the semester, I like to have the group assignments and group project topics set up. Currently, I've not really focused on that. I've not mentioned that, but I want to remind you that at the end of the semester, you have a group project over a topic related to information technology and accounting. And so that's something that you should start thinking about. We have 25 students enrolled in this class. I would like to have a course. I would like to have about 5 people per group if possible. So that's something to start thinking about. If you have a group of 6 people and you're just absolutely dead set on having 6 people, come talk to me. We may be able to work something out. I try to be as accommodating as possible, but I would like to do it 5 people if possible, 5 people per group, and start thinking about that. If you have somebody you'd like to be in a group with, or a couple people, but you don't have a full group of 5, that's fine. Contact me. You can send me an email. Let me know. We don't have a full group, but we'd like to be in a group together. I should be able to work with you. If you don't have any preferences of which groups you'd like to be, or which people you'd like to be a group with, I will assign you to a group. Okay. As far as topics go, I gave you a list of topics in the syllabus. You may want to review those. A lot of people tend to focus on the topics that are kind of new and cutting edge. Cybersecurity and artificial intelligence are 2 of the big topic areas. So I want to clarify, those topics by themselves are probably way too big to cover in a 10 to 15 minute presentation. So I would encourage you to think about, how would you do this? How would you do smaller components of the presentation? I gave you some examples with respect to cybersecurity. You can talk about ransomware, data breaches, a few other areas that are related in that area. Artificial intelligence could be machine learning, bots, some different areas and aspects. I think LLMs are also probably one that I don't have listed, but are very important nowadays. So we can actually cover the same topic area, but different topics within that subset if people want to do that. And usually that's the direction people go. If you really, really want to do system and organization control reporting, and nobody ever does, you can do that. That's a very valuable topic area that's also listed. But normally people want to do the more fun stuff, and I'm fine with that. It is your end of semester presentation, so you should have some fun with it. So please consider that and start thinking about that. I would like to finalize group assignments and group presentation dates, but before we go on fall break. So you basically have about 2 weeks before that happens. So start thinking about that now. All right. And then real quick, this came across my email. So I'm actually teaching the graduate course for forensics next year, and hopefully moving forward, I'll be teaching forensics as well. As I mentioned before, I am a former forensics professional. I do think that fraud education is very interesting. It's going to be particularly interesting moving forward as we start seeing technology take a bigger role in fraud prevention and detection. But I recently got an email from the ACFE, the Association for Certified Fraud Examiners, and they're accepting applications. No, I don't want to do that. They're accepting applications for the Richie Jennings Memorial Scholarship. And so this is for anybody, this is not just related to accounting by itself, but it's actually anybody who's in an anti-fraud field. So declared major or minor in accounting, business administration, finance, criminal justice, or a similar area. And then you will need to be enrolled for the next academic year, so 2025, 2026. And basically, that's all the eligibility requirements there are. To fill out the application, if you can go to the website, it's actually just the ACFE website. You can find the information on the Richie Jennings Memorial Scholarship. As far as that goes, if you want the specific link, feel free to email me if you have interest in it. But it's an opportunity outside of traditional scholarship lines within the School of Business for you to consider. And so I would encourage you, I think that a lot of you would be actually well qualified for the scholarship application if you have interest in it. All right, today we're going to start talking about the purchasing process. So the purchasing and payments business process, which I will refer to henceforth as purchasing process. You may hear this like by multiple terms. You may hear this by called procurement. There's a lot of terms for basically the same thing. And the idea being is that whenever we actually engage in a purchase transaction, or engage in purchasing or within an organization, that we're going to be following a similar process, or so we're going to follow a series of processes. That being said, this is going to look very, very familiar, okay? And the reason I say that is this is just the mirror of the revenue process that we've already talked about. So you're going to say there's a lot of similarities here, Dr. Barnes. That's intentional. The good news is that if you understand one process, understanding the other process is not particularly difficult. Now, there are some kinks, there are some wrinkles that we need to discuss, some different considerations. But for the most part, we're going to be talking about the same thing we talked about last week, just from a different perspective. So let's go ahead and talk at a very high level about the purchasing process. All right. So while revenue is a lifeblood of an organization, that's something we got out of the way last week, but revenues can only be provided if the necessary resources to provide them are available. So what resources are we talking about? And this is probably really relevant because we're going to have to diagram these with an UML diagram. So what kind of resources are we concerned with? Well, obviously we can talk about goods, inventory, facilities, manufacturing equipment, systems equipment. Some of these are going to be a little bit more permanent than others, but for the most part, these are all kinds of goods that we can identify with respect to these process areas. And then services, maintenance, janitorial services, equipment, and machinery repair. All of these are items that we would purchase in order to be able to provide these services. Now, I do want to point out a simple clarification here. When we talk about goods from the revenue perspective, we're generally going to be talking about goods that are held for resale, which is largely going to be contained as inventory. You will notice that's not the extent of goods when I talk about it from the purchasing process, because goods that for purchasing could be items that we sell or items that we hold on to for the purposes of generating revenue. For example, most organizations do not sell facilities or manufacturing equipment, at least not as a part of their business model. They may eventually sell them, but for the most part, they just usually buy them for the purpose of generating revenues. That's the goal. We can also consider labor as part of this process area. And if Dr. Otero were here, she'd probably be saying, yes, Michael, yes, consider labor. I'm going to say, no, labor is a separate process area. We're going to consider that separate functional area. Usually we consider that as part of payroll, and there's a lot of other concerns. I will say there's a little bit of a problem with that in the fact that labor, especially from a manufacturing perspective, is going to be captured within the cost of inventory. So we will consider that next week when we talk about the inventory process. Labor within the context of other process areas, it's related, but not necessarily the same thing. And we're not going to talk about a separate labor process, but most organizations do consider it a separate labor process. You've probably heard the letters HR. What does HR stand for? It's baseball season, Dr. Barnes. That's home run. All right. Now, HR, from our perspective, we're talking about human resources. All right. So a human resource area process would be that concern. It's fairly limited in scope, and a lot of organizations outsource this. That's why we don't spend a lot of emphasis on the labor idea. That being said, I just spent like 90 seconds talking about it, so that was probably more emphasis than I needed for it. So yeah, do as I say, not as I do. All right. So what are the fundamental function areas? Same basic questions we asked in the revenue process. What are the fundamental functions of the purchasing process? All right. Again, should look very familiar because these are going to seem very similar to what we did for revenues, but now we're on the purchasing side. So we need to make sure that we understand departmental and organizational requests for goods or services. This is basically a need has to be identified that a purchase has to be made. You can't just immediately just go out and purchase something and the organization says, hey, you're completely approved to do that. That's probably not true. There are probably organizations that if you need to make a purchase, you can, but usually large purchases, large acquisitions, consistently high level purchases, those do need to be approved through departmental organizational channels. If you buy lunch for your staff or buy lunch for yourself and get it paid for the organization, that probably doesn't fall within this area. But request for goods and services, then ordering the requested goods or services. I do want to back up. I did kind of skip over one part. With respects to the quoting process that we talked about before, the quoting process would actually be contained within that departmental organization request for goods and services. So basically, once we identify the need for goods or services, that's where we would contact a vendor or a supplier, and we'd say, can you give us a quote on how much this will cost? Because quote was a big part of the revenue process, and it's still part of the purchasing process. It's just a little bit more, it's considered to be part of another larger process within the purchasing process. Ordering their goods, requested goods and services. Then, of course, if we order items, we hope that we're going to receive those items. It's really kind of awkward if we order something from Amazon and it never gets delivered to us. We kind of like saying, hey, where's my, I don't know, what would something be on Amazon? Last thing I ordered on Amazon was pumpkin seeds, which sounds really, really weird, but they had a really good deal. Okay. So where are my pumpkin seeds? Okay. I really need my pumpkin seeds. But by the way, has anybody ever had pumpkin seeds, like unshelled pumpkin seeds? They're delicious. Okay. Don't have much flavor, great texture. I'm really getting off on a tangent. Sorry, guys. Okay. So where are my pumpkin seeds? Okay. We got to have the delivery of the goods services going to receive that. Okay. And it's important to note that receipt of delivered goods, that's actually how we would go through a warehouse or receiving goods, similar to how we talk about the delivery of goods. Services, on the other hand, they don't go through a warehousing process. They're delivered directly to the requesting party. So it's like, okay, we need custodial services for the corporate office. The custodian is going to come to the corporate office to actually provide those custodial services. It'd be a little bit awkward if they had to go through the warehouse first and then go to the custodian or to company headquarters. So that's just a little bit of a delineation I wanted to make. All right. Then presumably they're going to provide that good or services for us. And once that's done, then we're going to authorize payments. Now, again, this assumes a business to business model. Just for clarification, remember we talked about the two models last week. We talked about business to customer and business to business. Taco Bell, business to customer. Okay. When a business does business or does work or does an operation with another business, we call that the business model. Usually that's predicated by the granting of credit. Okay. Which is an important distinction because credit is not something we see extended in a business to customer situation, at least not normally. All right. So business to business model, we're going to have credit. Within our organization, we're going to have an authorization for that payment to be made. We're going to have to say, all right, we actually received our goods. You can go ahead and pay. That's a really important control, a really important step, by the way, because we want to make sure that we're not paying companies who have not actually delivered proper goods or services. And that's an important distinction to make. I want you to make a note of that, by the way, because we're going to see that in NetSuite in a few weeks. When we see that in a NetSuite view, we're actually going to look and make sure there's a proper control to avoid payment to unauthorized purchases. And then finally, once the payment has been authorized, we're going to actually pay the issuers. We're going to make payments on the supplier invoices. So how does this relate to what we learned back in 220 and 221? And the answer is you learned kind of this entire process, but it was kind of compressed into two transactions. All right. Two transactions that you should be somewhat familiar with because they're the offset of the transactions that we did in the revenue process. So let's take a look. Two transactions areas. So we've got our purchases and our accounts payable. Now you'll notice up here, there's a distinction here. It says purchases or inventory. All right. Either one of those is fine as a debit. The distinction is going to be whether or not they actually have a periodic inventory system or a perpetual inventory system. Remember what you learned back in your financial accounting class is that if it's a periodic inventory system, we debit purchases and then we reconcile the purchases account at the end of every period. If it's a perpetual system, we debit inventory because we actually track inventory on a perpetual basis. Every single time a transaction occurs, it directly reduces inventory. If you're really, really antsy about that and said, Dr. Barnes, I don't remember anything about periodic or perpetual inventory systems, I'm not going to test you on that, okay? So you can remember one or the other, and both of those will be fine. If I ask you for an example, you should be able to identify that one or the other are fine transactions, but I'm not going to ask you the distinction between perpetual and periodic inventory systems. That's mostly just a clarification for why this journal entry looks the way it does, okay? So that's a little bit of a relief, okay? So why would I not test you on periodic and perpetual? It's because I'm not comfortable with that myself. It's been a long time since I've done intercompany accounting. That being said, it's not particularly difficult, but we're not going to talk about reconciliation at the end of period. And that's just a little bit too much for all the things we've already got to talk about. Anyway, what's happening here? We're actually receiving some good or service, and we're going to pay for it at some point in the future. All right. So that's going to be our first transaction. We receive that good or service, and then we say, all right, we've received that. We'll make payment on it. Now, again, we're going to come back to this because it's important. Timing distinctions are really important here about recognition of when these should take place. And then at some point in the future, depending on the terms, we're actually going to pay it. Now, this is an interesting one because you will notice that when we talked about this last time, we talked about this in chapter 5. This was October 1st when we sent out the inventory, and then our customer made payment on October 31st, which basically means they paid within 30 days. This is a much bigger turnaround. And you will notice that there was actually a little bit of a distinction there. It says accounts payable, then there's a line for purchase discounts and cash. So what does this sound like? It sounds like that we're making early payment to take advantage of a purchase discount. And we talked about that for revenue. We talked about that. I put out more on the board. I said 1/10, N/30. What did the 1/10 stand for? It's 1% discount if you pay within 10 days. This is an example of that, except on this case, we're the party that's taking advantage of that discount. So this is going to be an example of how that purchase discount works. Now, again, before you panic, you ask, are we going to have to know how to make this transaction for purchase discounts? The answer is no. I'm not going to throw anything like that at you. Again, that's technical accounting bookkeeping, which is not something I do a lot of. I do think it's important to recognize where the transaction should take place within the system. As far as the actual transactions, unless I specify it on the study guide, I'm not going to actually have to specify. And purchase discounts would not be one of those things I'd expect you to know how to record. Again, my only delineation, the only reason I'm talking about it here is to clarify what is happening in this transaction. And it's kind of fascinating because we did talk about that last week. So we're actually looking at it, in this case, a 2% discount. So that would be 2/10 N/30 instead of 1/10 N/30. All right. So hold on to these. We got two sets of transactions. We got the purchase and then we got the payment. These two transactions are really important with respect to our diagramming because we need to understand where they fit within that system. All right. So let's go ahead and look at our book example. This is again Sunset Graphics, but this is their purchasing process. And there's descriptions on page 170. So they're going to research prices and product availability, which is something that was actually part of the revenue process we talked about last time. Select the best price and availability combination and select a purchase order, send a purchase order to the supplier, receive the items for the supplier and record the purchase to accounts payable, and then pay the supplier according to the credit terms. Now, I do want to make a note here. This is a really important one. This is something that always creates problems for me in all my courses, is that the book tends to use different terminology in different scenarios. It doesn't not use the term supplier consistently. It will jump from supplier to vendor. There is no distinction between those two terms. They're exactly the same thing. So if you see supplier or if you see vendor on the homework, on the exam, anywhere, they mean exactly the same thing. And I will try to keep it consolidated to one of those two terms. I personally prefer vendor. That's just the one that I've grown up with, the vernacular I've used, but the book will use those interchangeably. And so that's an important distinction to make. All right. So what are we going to do? Well, we need to understand how the system works based on the narrative, because there's our narrative description. So let's go ahead and create our diagram. Now, the one that I'm going to show you is a little bit different from the one in the book. I've actually took some creative liberties with items because I think that they left out some important points. So this is actually a little bit different. If you downloaded the slides before class, like say, if you downloaded them an hour before class, this may look different from the slides you have. I did make a change right before class because I thought it was a relatively important change. So with respect to this, the changes, and you can kind of see it's not perfect. I actually added a activity right here for receive invoice. You may notice it doesn't look the same. It's a little bit larger font. That's because I created that from other existing text. And so I'm not perfect at trying to create new images. I think I did a pretty good job here. Okay. I think this is probably like a 7.5 out of 10. All right. Not quite an 8 out of 10, or 8 out of 10, but close to that. But this is actually a description of the narrative. So request the price and availability. So we're actually talking about the quote there, but again, on the purchasing side, place a purchase order, receive the items, receive the invoice, and then send the payment. Now, I do want to make sure you know that this is very straightforward, and understanding these activities is not particularly difficult. All you really have to do is walk through that process. If you left off the receive invoice, you will notice this is not actually listed in here of receiving the invoice, but again, that's kind of an implied term. You wouldn't make a payment on something that you don't have payment terms for. It's a little bit like if anybody rent their apartment off campus, okay? So you have to pay your utilities, and usually they'll send you a utility bill either electronically or physically, and then you have to have that bill to know how much to pay. Same is true for any type of invoice. You need to have that bill in order to know what to pay. So that's kind of an implied activity, even though it's not listed here. If you did not include that activity on the diagram, and I ask you this on an exam, if I did not put that as a specific activity, I wouldn't count it wrong. But I would encourage you to understand how the activities work within this diagram. Even though this is not a specified activity in the narrative, it is an implied activity in the narrative, okay? And then, of course, we send the payment here, because once we have the invoice, we're going to make sure the transaction is paid for. Now, what is the important distinction to make before we get on to the more complex diagrams? Because remember, this is our base level. And what did I say about the revenue diagram? I said, if you understand this diagram for the exam, you should feel pretty good about where you stand. I'm not going to ask you too much more complex than this, okay? When I say, I should say this, if you can replicate this diagram on the exam, all right? This is probably the most challenging, the highest level ask you to replicate for the BPMN diagrams. We're going to look at more complicated ones, which you will have to interpret, but I will not ask you to replicate them on the exam. This is the only level that I'll ask you to replicate at. But what did I want you to know? I wanted you to know, how does this relate to the transactions we talked about before? So we had two purchasing transactions, the purchase transaction and then the cash disbursement transaction. Which activity does the purchasing get recorded? Give you a hint, it says where it's recorded purchase, okay? All right, everybody should say, oh, obviously, Dr. Barnes, so we receive the items. Is that consistent with our revenue discussion? Because we talked about where do we recognize revenue? And I said, revenue is when we actually meet the performance obligation of delivering goods to the customers. Is this consistent with that idea that on the purchasing side, we should recognize a purchase, recognize a liability when we receive the goods? It's probably good. Yeah, it's probably consistent with that. So consider, when do you owe money? It's when you've actually received, when you've got an obligation to pay for it. When do we recognize that obligation? When the goods have been received. That's when we record that journal entry. So purchasing or inventory, whichever one you want to do, is debited. And then we credit accounts payable. All right. That accounts payable recognizes that liability that has to be paid some point in the future. Speaking of which, let's go to the future. 10 days later, we're actually paying for the accounts payable. So we debit accounts payable, we credit cash, because that's the entry that we use to record that payable. Where does that occur in this diagram? It's not listed on the diagram, so this one's a little bit more challenging, though not challenging that much. At the very end, where it says send payment, okay? Send payment is probably the point where you send payment. Can we agree with that? Okay, yeah, that's where we're actually going to make the payments there. So again, I know that this is really easy questions, but it's really important to be able to understand where the recognition points occur, okay? So understanding how this aligns with those journal entries that we looked at, while it seems really, really simple, you will be responsible for understanding that for the exam. And I will tell you 100% chance that I will ask you a question about this for one of these process areas, about where recognition occurs. So you do need to understand recognition timing. And even though it seems really easy, I've had people who've missed this question in previous courses. So that's why I'm harping on it so much, because I think it's an important concept. All right, moving forward, let's talk about the more complex versions of this particular diagram. Now I'm going to show you this diagram. This is the book diagram that I did. And this diagram, it kind of seems like somebody at McGraw-Hill, an editor there, was kind of like saying, okay, we need to create a BPMN diagram for the interaction model with the suppliers. And somebody was just kind of like saying, I'm not sure what that is. I'm just kind of phoning it in, okay? This is really phoning it in, because this does not look like our supplier interaction model from revenues, okay? So I'm going to show you what I did, and you're going to think I'm really, really smart, okay? Or you're going to think you're going to roll your eyes. One of the two, okay? But I'm hoping it's the former, but if it's the latter, that's cool, okay? So what I did is I revised the model, all right? And I use this model right here. And you may say, this looks really, really familiar. And I say, you know why it looks familiar? It's because all I did is I changed this from sunset being down here to sunset being up here, okay? All right, I did make a couple of other small changes, but for the most part, this is exactly the diagram of the supplier interaction model, with sunset now being the customer as opposed to being the supplier, okay? So again, this is one of the things that I was talking about. If we understand the revenue process, the purchasing process falls in line. And I was trying really, really hard when I did this. I actually made this change last year, and I made the change and I say, okay, I really need to scrutinize this, because any little detail that's wrong could be off. And I scrutinized it pretty heavily. And I said, no, this actually is pretty consistent with everything we've talked about, which basically goes to say that the way that we view our customers is the way that we should view ourselves as customers. So we can actually use that same model to depict this. Now, I don't want to go too much in detail on this, because we went into detail on this for revenues. What I'd rather talk about is a little bit more of a expanded model. So one of the things we need to understand with respect to purchasing is that usually we'll cross multiple department lines. And part of the reason for this is that purchasing, procurement, that whatever process you're going to refer to it as, is going to cross departmental levels of the organization. So how do we actually correspond, or how do we actually communicate across departmental levels? So we've got a pretty simplistic diagram here when we talk about supplier interaction across departmental levels. So keep in mind that the buyer is generally going to be different from the receiving department. The part of the organization that's requesting goods or services is not going to be the organization that necessarily receives that. Think about a really large organization where it's like, okay, we need to buy a couch for this particular part of the organization. It's like, okay, why do you need a couch? It says, well, because our department head likes to take naps in the afternoon. It says, well, that sounds like a rational explanation to me. All right. So the purchase for approval for a couch for whatever reason is approved. That's not going to be delivered directly, at least in many circumstances, directly to whatever department ordered it. It'll be delivered to the warehouse. So there's a separation between the buyer and the receiver. All right. And then whoever's paying this is not necessarily going to be the same department. It's going to be part of the organization that's responsible for approving the transactions and recording them. So we've got a separate accounts payable area out here. Now, this is pretty much an expanded diagram that shows the departmental responsibilities. Do I think it's important to understand the different responsibilities? Yes. Do I think it's important to diagram them? Not necessarily. I do think that this is an important distinction to show that there's going to be different levels of responsibilities. And I do think that you need to understand what parts of the organization are responsible for different functions. The good news is that we don't have to deal with that right now, because we have an ERP software system that we can actually walk through example transactions where we can talk about this specifically. So when we get to NetSuite, what I think I'm going to talk about is I'm going to talk about who would be responsible for this particular step. And what we're going to find out is that we're going to say different parts of the organization will be responsible for each of these steps. And we're going to identify which part of the organization or which individual is responsible for that. Now, there are some interesting points here that I do think are relevant. Okay. So with respect here, you notice that we've got a gateway here, which they did not close their gateway, which again, is causing me a little bit of a fit because I want to have a closed gateway. But if you understand the intuition behind the gateway, this is a step that's not in our original model that I think probably should be. Because when you receive the items, what if you don't receive what you ordered? Or what if you received something different from what you ordered? What are you going to do? You're going to say, this is not what we ordered. We're not going to pay for it. We're going to send it back. Although I do want to point out something really quick. This is something for clarification. How many of you all order from Amazon on at least a somewhat regular basis, like consistently? Okay. So for those of you who order from Amazon, I'm not taking a poll on this. You don't have, if you raise your hand, I'm not collecting this for data use. Okay. You don't have to be shy about it. I order from Amazon quite frequently. So interesting fact about Amazon, if you order perishable goods on Amazon, they cannot be returned. Okay. So if you order perishable goods and they send you the wrong merchandise, then you basically should contact them and say, all right, you sent me the wrong merchandise, please issue a credit. And then the reason I bring this up is that, so everybody know about the snack cart upstairs in Violet Hall? If you don't know about that, it's the coolest thing ever. And I'm not just saying that because I'm the one who created it. Okay. But I used to order from Amazon pretty frequently there because I was like, just got Amazon Prime and I was like, 2-day shipping. Yes. Okay. And then the pandemic just completely, totally disrupted that. But anyway, going into detail, I used to find out that I would order from Amazon and then I would get packages that were not what I ordered. This happened quite frequently when I ordered from Frito-Lay. Frito-Lay would frequently send me the wrong packages, and hopefully there's not a representative from Frito-Lay watching my lecture right now. So Frito-Lay would frequently send me the wrong packages, and I would open them and says, this is not what I ordered. And I found out, because they were actually stand-up people, that they could not send it back, and they basically said, all right, we'll issue your credit, and you won't have to pay for the merchandise, and you just keep it. I was like, yes, score, free swag. Okay. But some more ruthless, some less honest individuals on there, if they send you the wrong merchandise, they'll say, hey, would you like to, we'll go ahead and sell you that as a discount if you'd like to go ahead and keep the merchandise. So if somebody says that to you, if they send you perishable goods, they send you the wrong good, and they say, would you like to buy it at a discount? It says, no, I would not like to buy it at all. Please issue a credit, because they can't take it back because it's perishable and you're not forced to pay for it. Which I know seems kind of shady, but you gotta be honest. If they didn't want to, if they had sent you the right goods in the first place, then they wouldn't have been in that problem. So that's their problem, not yours. Okay. That's just life advice. You got free life advice in today's lecture. Okay. I want that going into my evaluations, by the way, whether that's a good thing or a bad thing. All right. Moving forward. Let's talk about the UML diagram. So let's go ahead and relook at the purchasing process summary as we would depict it from the UML diagram perspective. So an employee selects a supplier and issues a purchase order. So a purchase order promised to pay for a purchase from a supplier, which specifies the prices and quantities ordered. So the supplier sends the product to Sunset. Product received by a Sunset employee, which triggers a recognition event, and that's going to be our first transaction. So that's our first transaction event we talked about. Whenever the purchase is received, that's when we recognize the liability and the payment due. The employee pays the supplier. That's the second set of transactions. Okay, that's the second transaction where we actually make the payment. So those are our recognition points. So in order to be able to diagram this from the UML perspective, our first step, and always our first step, is to identify our classes. Now, what are the three classes that we generally are focused on in UML diagram?
Resources, events.
Yeah, resources, events, and agents. Okay, resources, events, and agents. There are conceptual structures here, and I want to again clarify. You will not need to know how to diagram conceptual structures within a diagram, though I may ask you clarifying questions on conceptual structures, like examples of that. So do not write down in your notes, do not need to know conceptual structures. That's not what I said, okay? That is not what I said. I said you do not need to know how to add them to a diagram, but you should still understand how they fit within a UML diagram, okay? Our primary focus is going to be on the is going to be on our classes, the resources, events, and agents, okay? So let's go ahead and make sure we list those all out. So I want to start a little bit of a different trend, because I normally start with the events, because the events are what drive everything else. We're going to come to the events at the end, but I think those are less intuitive than the rest. So let's start with the resources. So remember, back in our revenue process, our resources were going to be our products and cash, because we're actually exchanging or giving products to our customer. In exchange, they deliver us cash at some point in the future. Have those resources changed in this particular process? No, we're still, but in this case, we're the ones receiving products, and we're the ones giving up cash. So the good news is our classes are exactly the same, okay? Products and cash. All right, going over to our agents. Back in our revenue diagram, our agents were going to be our employees and our customers. Have those changed? One of them has not changed, one of them has changed. I'll let you guess which one has changed. So our employees are still doing the work. They're the ones who are still initiating the transactions to make sure those take place, okay? But the other agent was customers. Customers is a specific term reserved for revenue generation, all right? We are the customers in the transaction, but we're doing business with an external party. If we're purchasing from an external party, that party is called a supplier or a vendor, okay? So that's going to be our agent's UML diagram, employees and suppliers / vendors, whichever one you prefer, okay? Now, let's go ahead and talk about the events, because that's where the things are getting a little bit tricky, okay? So we're going to talk about three distinct events. Now, remember in our UML diagram for purchasing, we had quotes, orders, and cash receipts, okay? And these are going to loosely align with those. So let's talk a little bit about what those are going to be determined as in our UML diagram. Now, again, the terminology is not important. It's actually the interpretation. So if you use a slightly different term that means the same thing, that's fine. But you do have to understand the distinction, okay? If you use a completely different term that's wrong, then I would count that wrong on an exam, okay? So what is going to be driving our purchasing process here? What is going to be our first event that drives a purchasing step? The identified need for goods and services, okay? So when that's approved, what is issued, okay? What is that event called? The issuance of what? So it's kind of what drove our revenue process, but it's really driving the purchasing process. It's that purchase order, okay? But you'll notice here, I actually specified purchase order. What is that purchase order here, right here? That's our first event. That's actually saying, we need this from you, supplier. Please deliver this to us, okay? Now, you might say, purchase order doesn't sound like an event. It sounds like some sort of document that would drive event. Keep in mind, when we talk about purchase order, the reason that we're classifying it as an event here is it actually encompasses a significant series of events that are all related, okay? There's going to be the request for goods and services. There's going to be the approval for goods and services. There's going to be a request from the supplier. There's going to be approvals from a supplier, okay? Those are all individual events. Now, I will give you the option. We can contain all of these within a single event, or we could actually have a UML diagram that has every single one of these as an individual event. What do you guys think? Do you want to do 4 events or 1 event? I'm good with 1. Okay, I'm good with 1. Okay. And again, for those of you who held up a finger, thank you for holding up the correct finger. All right. So purchase order is going to be like a self-contained event. Okay. Self-contained event. Now, that being said, we make a purchase order. Presumably the goods and services are going to be delivered to us. Okay. We talked about this back in revenues. That's delivering. That's an order. Okay. You can still use that same term as well. The only reason I'm saying a distinction is the book actually clarifies this. They say this is a purchase. Okay. Purchases, which I don't actually like that term. I'm not going to show you the UML diagram. In the UML diagram, the central event is called purchases. I personally think it should be called orders because that actually depicts the event that occurs, the delivery of the order. That being said, there's not a big distinction there. If you use the term purchases, that's fine. If you use the word orders, that's fine too. Either one of those would be acceptable. The final event, okay, remember in our UML diagram for revenues, we said it was going to be cash receipts. Is that the same event here? So are we receiving cash in the purchasing process? No, we are dispersing cash. Okay, so we want to make sure we clarify that as cash disbursement. And that would be 100% wrong if you called it a cash receipt here, because in most situations you don't receive cash when you make a purchase. That'd be a wonderful world. It's like go on Amazon, you just buy something and said, all right, here's some cash for your purchase. Okay. I'm not sure how that would work from a business perspective, but you can dream. You can dream. Maybe AI will solve that problem for us. Who knows? Who knows? All right. I've actually been reading a lot of books on AI lately. I apologize. You can hear me talk about it a lot. All right. So here's our UML diagram depicting what we just talked about before. Now, again, could we actually identify more REAs in here? Could we identify more resources? Could we identify more agents? And specifically, could we identify more events here? The answer is absolutely yes. If we wanted to dissect this more cleanly, then we probably could. What is the problem with adding more classes in this diagram? We talked a little bit about it last week. Well, if I add a class, I have to add associations for every single relationship that class has with other classes. Okay. So remember, we said purchase orders is technically like 4 events here. So if I actually add all 4 events up here, I've got to draw associations for every single one of those events. So what is our goal is to keep it as clean as possible, to keep it as simple as possible. This is still fairly complex, but this is the level that you would need to know for the exam. Okay. So for example, if I asked you to document or to prepare a diagram for the exam, this is the highest level that you would get. That being said, you would need to know every single concept entailed within this diagram. By the way, I do want to clarify something for the exam because the UML diagrams are always the really confusing part. I will not give you unfamiliar UML diagrams. The narratives and the descriptions will be emblematic of the things that we've talked about in class. So if I ask you to give me a revenue diagram, it's going to be almost identical, if not absolutely identical to the revenue diagram we talked about last week. If I give you a purchasing UML diagram, it's going to be identical or close to this one right here. And the only time that it will be different is a distinction that I will make very, very clear if I say that this is different from a UML diagram. It's going to be a very minor interpretation, but it should be a very clear one. So should be your area of focus on this. And this one is not particularly hard to determine. If we actually were to look at the associations, they're pretty consistent with the associations that we looked back in the revenue diagram. Okay. We talk about the purchase orders and the suppliers. That would be an interesting one. So purchase order, there's going to be 1 purchase order per supplier and only 1 purchase order supplier. A supplier could have 0 purchase orders. Okay. We could have never ordered from the supplier before, or we have ordered and they didn't approve us, or we could have many purchase orders from the suppliers. Let's do another one. It's pretty easy. Let's do products to purchases. Okay. A product can be involved in 0 purchases. Okay, we can never purchase that product whatsoever, or it can be involved in many purchases. Purchases have to involve at least 1 product. Why would we make a purchase if we didn't have 1 product at least purchased? Now you may say, well, that would include services. And I say, yes, but that include if we do services on here, if we throw services, we have to add another class up here, which again, remember, I wanted to keep it simple. We don't want to throw up there. So we're assuming that at least 1 product could be products and services both. All right. So at least 1 service or product, and then could be many service or product all on the same purchase. All right. Again, interpretation of the association is really, really important. Since we don't have a lot of time left in class, I'm not going to go through every single one of the multiplicities, but I would encourage you as you're preparing for this, as you're going for the homework, and particularly as you're preparing for the exam on this, that you make sure you review the multiplicities so that you can interpret them, because that will 100% be a series of questions on the exam is interpreting the multiplicities. Okay. So I don't think this is particularly difficult given that we've talked about before, but let's go ahead and go into a little bit more detail. There are 2 more things I want to talk about. How do we add conceptual structures to this? All right. Again, all that we need to know for conceptual structures, that these are going to be additional pieces of information. Now, this is copied from the book, which I absolutely hate this diagram from the book, because you will notice that somehow our purchases process just completely disappeared. And there's actually an explanation in the book. They actually said, well, if purchase orders always have cash disbursement associated with them, we don't need a separate purchasing function, which really, really annoys me. But I don't want you to focus on this diagram. All I want you to focus on is the addition of conceptual structures. When we add a conceptual structure, there are a few things that we need to note. First of all, for the conceptual structure, we need to understand what the relationship that we're trying to depict is. So in this one, product categories to employees, we're trying to determine what is the association between products and employees, and say employees manage product categories. For everyone, we have to depict the associations, and the book did not do a very good job of this, because you will notice they didn't add a multiplicity over here. But I'm just curious, just for fun, let's see if we can figure out what that multiplicity is on our own. We're going to take a loss into a gain, okay? We're going to take something the book didn't give us, and we're going to add it ourselves so we gain some knowledge here. So employees are responsible for managing a minimum of how many product categories? 0. You can have some employees that don't manage any product categories. And a maximum of many. Yeah, many. Good, okay? So we can have 0 to many. So our multiplicity here is 0 to many, all right? So again, that's not an intentional, I didn't intentionally leave that out. That actually just copied this straight from the book, but it's a good exercise to get into to be able to interpret what's happening there. By the way, there's also some multiplicities that should go down here with suppliers and supply categories. This one's a 0 to many up here. This one's a 1 to many, just in case you were curious right there. That's pretty easy interpretation. So if we add a conceptual structure, the most important thing to understand is we need to understand what classes are we trying to define a relationship with. For product categories, we're trying to define a relationship with products and employees. For supplier categories, we're trying to define a relationship between suppliers and employees, okay? That's how we would interpret conceptual structures. Remember, those are classes that are outside of our normal mold of REA. They're not resources, events, or agents. They're just information outside of that structure. The final thing I want to talk about, and this is kind of a sign of things to come. Something you will notice as we've looked at these REA diagrams is there is a significant overlap in the resources, events, and agents that we've talked about. Specifically, we're using the exact same resources, and we're using one of the two same agents. Could we create a combined combined UML diagram? You say, no, I hope not, Dr. Barnes, that's way too much. And the answer is absolutely yes, we can, okay? So if we wanted to create a combined UML diagram, we can actually put the combination here. Now, I don't want you to get too invested in this, okay? I don't want you to get too invested in this diagram. And you're going to be like, thank God he's not going to make us work in this diagram. Wait a minute, what's the catch here? Why are you saying that, Dr. Barnes? And the answer is because we still have one more process area, okay? And we're going to have a combined UML diagram of all 3 process areas with that one, okay? So you thought this was bad, we get actually to the worst one. Now, the good news is I'm not going to make you replicate that, but you will absolutely need to understand the interpretation here. So it's good to actually use this one for reference as we start moving forward. All right, we're done for today. I will see you all on Wednesday for more NetSuite.